So let's just call a spade a spade. The risk-reward ratio over the next few months to maybe even a couple quarters is not super favorable in silver.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce silver Valcambi bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce gold Valcambi bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thank you so much for having me back. Certainly exciting times. It wasn't too long ago we spoke and silver was knocking on the door of $50. Well, yesterday we eclipsed that key resistance level of 50. Didn't close above there. So certainly exciting time to be talking about precious metals.
Certainly. And you've been talking about how the US dollar is really key here. So did you want to share what's going on with the US dollar index and how does it play into what's happening in silver?
Absolutely. Yeah. As I'm pulling it up, I'll just mention we were chatting before this show how I think the two most important charts right now are the monthly chart for the US dollar and the monthly log scale chart for silver. And, of course, I'm speaking to silver investors. If you're a silver investor, those are the two most important charts. And, this roadmap that I drew out as I'm sharing my screen here, and your viewers can maybe, I get sometimes people are listening on the phone or, while driving or whatever. You might want to take a look at your phone if you can, because this picture really does paint 1,000 words. When you zoom out on the long-term chart of the US dollar, what you see going back to, the 1980s, is lower highs, like major peaks that are lower. And that is, in fact, a downtrend when you zoom way out. However, what I think it's overlooked, technically speaking from the dollar, is that it's actually in an uptrend. Now, I'm a dollar bear from a fundamental basis, so I'm not like a dollar milkshake proponent, so to speak. However, when the technicals are the technicals, and when you look at the chart from 2008 to present, 17 years now, it's in a gently rising uptrend. And the last 1, 2, 3, 4 times that we've tested this support, well, we've bounced. And it's interesting that we're right at that support right here, right now. And I drew out this potential path, the very beginning, January of 2025. And it's followed this path almost perfectly. Now, the question remains, will it bounce here? What could cause the dollar to bounce? I mean, there's a variety of different catalysts, but conditions are ripe for a bounce in the dollar because nobody's expecting it. I'm not necessarily predicting like, hey, this is absolutely what's going to happen, but it's a risk to precious metals right now. And this just happens to come at a time where the dollar is testing major support at a time where silver is testing a major confluence of resistance. So I think the monthly close on those two respective charts will be very important from a technical perspective. When I zoom in here, it's kind of hard to see with this path. I'll just move that. You can see this green candle right here. I'm circling it. It might be kind of hard to see. That's the monthly candlestick. So we're bouncing from the support line. If we close back, below this support line, well, that would kind of serve to maybe invalidate this channel. But if we bounce from here, that would validate this pattern and, increase the likelihood of a little bit of a bounce in the dollar, if not a bigger bounce in the dollar, and, perhaps a pullback and consolidation in precious metals.
With respect to silver, did you want to share that chart? I know this $50 level is super key. That's why we're having you on just a week after we spoke last, because so much has transpired and now we're above $50. So but you're thinking that maybe caution is still warranted.
Yeah, caution is warranted. And I just like last time we spoke, I want to be careful because I don't want to miscommunicate and sound like I'm a bear. I think we're going well into the triple digits in silver. I'm irresponsibly long precious metals myself. However, on the short term, I don't like to always be a perma bull. And I like to view things as in terms of risk-reward ratios. So let's just call a spade a spade. The risk-reward ratio over the next few months to maybe even a couple quarters is not super favorable in silver. Yes, there is upside potential. However, there's also downside risk. And I look at the ratio, the risk reward ratio is probably about 1-to-1. Yeah, it could go up another 10, $15. That's not my base case scenario, but it's possible, but it could also fall by an equal amount. So those are just things to be cognizant of when you craft your own strategy. A lot of people have maybe big profits in paper positions. Is your strategy to just sit through any kind of downside volatility on the way to triple-digit silver? Nothing wrong with that, but you want to be intentional with it. That's my point. And you can see this monthly candlestick chart kind of looks almost like the opposite of the dollar. Dollar sitting against long-term support. Well, silver right here is sitting against a major confluence of resistance. There's this rising wedge pattern, and every time we've come up and tested this resistance, going back to 2015, well, we've had a pullback, a consolidation. Well, we're there right now. In fact, we're poking our head above it. So this is a monthly candlestick. That's why I'm saying where we close this month is key for both the dollar and silver. We're above this resistance right now. If we close above this, that would serve to invalidate this pattern because we closed above it. It's no longer valid. However, if you have a long wick above it and then you close back below this trim profits line, this red resistance line, well, that would indicate a high probability of a pullback / consolidation in silver. Now, this line just happens to coincide with key horizontal resistance at the $50 area and also down at 44 is the next, former resistance, now support. So major confluence of resistance here. When I think about probabilities of potential outcomes, this is admittedly subjective. So take it with a grain of salt. But how I compartmentalize it in my mind is, first I come up with a forecast and probabilities of that forecast coming to fruition. And then I craft my strategy around those probabilities. So I'm assigning roughly a 40% probability that we ran up to 50. So that happened. And I've been saying this for a few months now, run up to 50. So that's part is coming to fruition. 40% probability that we pull back, 50 acts as like a wall of resistance, pull back, consolidate, and eventually punch through it after, this overbought condition has been worked off. Probability number 2, outcome number 2, roughly the same probability, about a 40% outcome, that we break through 50, consolidate along 50 as now support for a period of maybe a few months, maybe even a quarter or two before moving higher. And then I think the least likely outcome, but within the spectrum of possibilities, is that we keep moving higher into the 60s, maybe even towards $70 silver without a meaningful pullback. I'm giving that roughly a 20% probability, least likely outcome, but possible. So then the question to ask yourself is, how do you have a strategy in place to prosper in a variety of different outcomes? So to me, the way I'm thinking about it, yes, I have some options as insurance, but also I'm trimming profits and I'm trimming enough so that I would welcome a 30 to 40% pullback in some of the mining stocks. But I'm not selling so much that I would have deep regret if we move up to $65 silver. So I'm positioned. Yes, I like to make forecasts, but what I'm doing with my strategy is positioning myself in a way that I'm happy whether we pull back and I'm happy if we run to the upside. And that allows me to sleep well at night.
When you say a close above that trim profits line, as we see on the screen right there, that trend line, do you mean a monthly close, I assume, since these are monthly, there's a monthly chart?
Yes, sir. Yeah, that's really close. So that's exactly what I was trying to say. So this is a monthly candlestick. So we've still got, 20 days left in the month of October. So we've got some time. So a monthly close above here would be very bullish. A monthly close in the month of October below there would indicate likely more consolidation / pullback.
And you have the note also about the RSI being extremely high right now, and what has happened since the 80s when we've seen the RSI this high. Can you expand a little bit on this and what the significance of this is?
Sure. Yeah, I put that note in there a couple weeks ago when we just punched above 70, because it is noteworthy technically when you get above 70 on the RSI. That's considered overbought. So what I did is I zoomed this chart all the way back. I'm not going to do it now, but all the way back to the 1970s bull market. And I looked at every single time that monthly RSI got above 70. Yes, that is an overbought condition, and it did precede, a sharp pullback. But however, there was more upside. So my point is, once it poked above 70, almost every time it continued up to get even more overbought until that RSI got to around 80. Interestingly, the RSI peaked yesterday at just over 78.5. So we're getting there, just another little bit more upside, and we're going to be extreme overbought, where historically that precedes more sizable correction.
Now, when it comes to gold, we are kind of riding that line at $4,000 an ounce. What is your take on gold, and do you anticipate a correction in gold as well?
I do. So here's how I think about gold. The caution signals are piling up, but that's a key distinction. What I'm not saying is there's any sign of a reversal. So there are caution signals, extreme overbought RSI, second highest in history. COT, bearish, euphoric optimism, extreme overbought sentiment. These are all caution signals, but there's no sign of a reversal yet. So caution signals, but there's still no sign of a reversal. So I'm kind of, again, looking at risk reward ratios, not so favorable over the short term in gold, although ultimately I think we're going to $10,000 plus. I wouldn't be chasing gold right here, right now. Now, that said, if I didn't have any exposure to physical metal, I look at that as insurance. So, I would probably go get some exposure now if I had none. But if I were looking to speculate for capital appreciation over the short term, probably wait for a better opportunity in gold.
Another market that people haven't been paying too much attention to, because we have seen these dramatic moves in gold and especially silver breaking that $50 level, is uranium. People had been talking about this a couple of years ago as we were, making these new highs and all of that. But now we are actually again making new highs. Can you expand on that?
Sure. Yeah. Uranium is one of those sectors. I love it because I like oil, I like hard assets, but uranium, I like the simplicity in that it's just a pure supply-demand story. Demand is fairly easy to predict. I mean, there's potential upside kickers with AI data centers and stuff, but if you exclude all that, you can kind of project out demand and you can project out supply within, a reasonable estimation. And the bottom line is the price is too low to incentivize the new production that's needed for all these reactors that are coming online around the world. And the price is going to have to resolve higher. And that's beginning to be recognized by, I think, the general investing public. Back in April, this sector was just obliterated. Even before the tariff tantrums, uranium had fallen. This is URNJ, by the way, the Sprott Junior Uranium Miners ETF, kind of similar to GDXJ for precious metals investors. Had fallen from 31, previous all-time high, down to 11. So it has to go up by almost 300% to get back to where it was. Well, it's done that. And we were buying uranium. I'm not trying to pat ourselves in the back, but as a contrarian, man, I loved the sentiment in this sector when everyone hated it back in April. This sector had just gotten decimated. And here we are now up almost 3x in an ETF. And we're breaking out today, as we're speaking right here, right now, to a fresh all-time high in URNJ, the Sprott Junior Uranium Miners ETF. I think similar to silver, this is a key battle line. I think a likely outcome is we kind of break through here and then consolidate what was resistance becomes support. So I wouldn't necessarily be chasing it here. That's a massive move, but over the long term, similar to precious metals, I think there's a lot of runway ahead for uranium. And I'll show one more chart here. This is URNM, similar to GDXJ to speak to precious metals investors who maybe aren't so familiar with uranium. That one's already broken out. So just like GDX led the big move higher, and then GDXJ followed, and then SILJ, the more speculative components. That's kind of happening in the uranium sector right now. The leading stocks, the Chemicos, the uranium energy cores, kind of led the charge higher, and now the more speculative components are beginning to play rapid catch-up in uranium. So a lot of runway ahead. The spot price right now is right around 80, I think just touched below 80. On uranium, the previous all-time high is $148 back in 2007. So a lot of room ahead just to get back to where it was in 2007. And if you adjust that $148 using government inflation numbers, that gives you an inflation-adjusted all-time high around $200. And here we are at 80. So pretty excited about uranium. Wouldn't necessarily chase it right now, but I do like the prospects technically and fundamentally.
And last week, we also touched on platinum, but any other updates there, as it seems like we've continued to see it rally higher?
Yeah, platinum is one of those metals. I'll just continue to say I think it has the potential to outperform silver. However, it carries more risk. So it's from risk-adjusted basis, I prefer silver, but platinum, it does warrant considering some exposure in your physical metals allocation just because of that potential. Previous all-time high, 2309, and here we are we're speaking at 1630. So that's another, almost $700, $600, $650, $670, doing math in public, of upside potential here just to get back to where it was, at its previous all-time high. So I really like platinum. If you're looking to buy a dip, what was resistance becomes support. So this $1,500 area, any pullbacks to there, I think would be pretty compelling spots to accumulate a little bit of platinum if you're so inclined.
Before we let you go, Steve, it's a crazy time in the market. So, are there any last thoughts for our viewers? How to navigate all-time highs for both gold and silver, and huge moves, as you mentioned, in uranium and platinum. How should people be thinking about this all right now?
Yeah, that is the most important question. I think that every individual investor needs to answer for themselves, because you can't rely on some guy on YouTube. I can't tell you what to do with your own money. Because I don't understand all the variables of your own life, but you should have a plan, a profit-taking strategy. We just put out a video on Silver Chartist called Silver Swan Profit-Taking Strategy, and SWAN stands for Sleep Well at Night. And the answer is what allows you to sleep well at night? And I would encourage people to try and some of you may already do this, but I know there's a lot of experienced investors. But when I was new, I knew all the fundamentals for silver and gold, and I knew the potential upside targets, but I didn't have a strategy to navigate the volatility along the way, and I was focused purely on upside potential. I think a better way to think about it is, how do you maximize risk-adjusted returns? Not just total return, but risk-adjusted returns. How do you manage risk along the way? And these are things like position sizing. What's your plan to take a little bit off the table, to take some profits along the way? Is that a strategy? Are you experienced in options to manage risk? These are all things to just think about, because the idea that you're just going to hold it all until the very end of the bull market and then push the sell button at the end, that'll be very, very difficult to execute. So having a simple strategy that you can execute and that allows you to sleep well at night.
Well, Steve Penny, we always appreciate your time. Thank you so much for joining us again so soon. Our viewers, once again, can go to silverchartist.com if they're looking for more info from you. Thank you so much, and God bless.
God bless you too. Thank you so much for having me.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce silver Valcambi bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce gold Valcambi bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.